Warren Buffett said this morning that Europe is beginning to slip pretty fast. That's to use Warren's own words. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Thursday. That's right, Thursday, the 12th of July. Can you believe this week has gone so quickly? And we're so glad to see that Warren Buffett is in agreement with our trade triangle technology, which has been negative on Europe and the United States for quite some time. Now, we mentioned earlier in the week that this week was going to be an important week for the markets. Well, it's turning out to be just such a week. Tomorrow is Friday. Let's see how the markets behave as JPMorgan Chase drops a bomb on the markets, reporting their earnings and derivative losses. And I think the losses could be a surprise element in this market. So let's go right to the charts, and here we are looking at our chart of the S&P 500, and as you can see, there's a couple of things going on there that I want to point out to you. And they are, first of all, we have the little parabolic line over the market right now. You see how it came up? Boom, we crossed it, and now we're coming down. Now we are getting into a little bit of an oversold condition right down here. So let's see how that plays out. But generally speaking, one of the key levels to look at, in my opinion, is going to be right here. This close right here, which is 1,313. So that's a key level to watch. And I think it's going to be next week we'll break this. Possibly tomorrow, I don't know, but more so next week. Now we may see a little bit of a bounce. Any bounces we see in this market, in my opinion, are going to be purely on short covering. So if we see a little rally up here, I think it's going to be short covering rally and not new buying. Certainly we're down today, and one of the things we wanted to talk about, and we talked about in yesterday's report, was the fact that our trend line, I'm going to go, first of all, I'm going to take this to a close only chart, and the darker line right here is a close only chart, and these are the critical points right here and here. So let's just draw a very simple trend line. Just click on the lows, drag it to your right, and you can see right now, we closed pretty much on this line yesterday at the 1340 level. I'm surprised, actually it was a little bit above that, maybe 1341 or somewhere like that, but nonetheless we're below the level today. If we close there, we're breaking this line, indicating the potential to certainly test the 1313 level and possibly go all the way down to the 1280 level. Now we've looked at this market longer term. We think there's a potential to go quite a bit lower than that, and it gets back to this perception, the perception of the markets, the trading of the markets. And the one thing we want to see happen here is we want to see our weekly trade triangle turn red. It's currently trading at green. We want to see that turn green. When we get the red, when we see that turn red, then all of our triangles are in alignment. This will go to 100, and then we'll start seeing a stronger downtrend. But remember what we've been preaching now for quite some time. The monthly trade triangles are the important ones in stocks because they show you the longer term trends. And even though you may see some counter trends, the longer term trends usually come in to prevail. It takes a lot of energy to turn these markets around. So let's go to our next market. Next market's crude oil. Now this is interesting too. Now remember what I was saying about the monthly? Well, we use weeklies on the crude oil, but generally speaking, the monthlies tend to also have a large bearing. If you scope this out, if we scope this out a little further, we're just looking at 3 months, but let's say we go to a year, you can see that this market is actually coming down to an area back here. We said anytime the market gets below 80, it tends to pop. I think we've seen a little pop, but generally speaking, I think we're going to make new lows. I just have a feeling that this market is not over with yet. If we just take our monthlies, you can see the monthlies still in place, very, very much in place from 97.37. We're currently trading at 85.03. And the key level to me this week is going to be, and I'll show you what that is. I'm going to put this back on. I'll get this a lot closer so you can see this. Key level to me is going to be the 84 level right here. If we close below 84, I think there's a good chance we will see the market test certainly the 78 to 80 level. That would be the target zone, at least initially. We've come out of a very oversold condition. I could show you it was pretty oversold right here, and we've come back out of that. So we're sort of in the midpoint of the trading range there, but generally speaking, we do have a trading range. A plus 60 is a trading range, so you see the weekly and the daily are both up. Only the monthly is negative. So generally speaking, I think this market's going to be very, very interesting. We've seen a little bit of a cover here today on the downside. But I think generally speaking, we could see this market doing one or two things. Either we're building some sort of a base to go higher like that, which could definitely be a case, or we're going to see this market sort of just roll over. And I think that's probably an interesting likelihood will happen because things are slowing down globally. And I think if we see this market certainly take out the 84 level, it's going to test that 80 level, which we think is a key area. And what we may also be doing is just building that base between the the 80 levels and the 88 levels, is just to sort of maybe make that turn somewhere along the line a little later in the year, perhaps when maybe the economy is looking a little bit better. So let's just clear the screen, and let's take a look at our next market. I beg your pardon, that was a message coming in from my broker. So let me just keep going and clear the screen, and looking at our next market. And the next market is going to be the Dow Jones. Now the Dow Jones, we pointed this out yesterday, did not work as well as we had, it worked as well because we thought the market with its trend line, if you remember, we put a close only chart. We pointed this out yesterday to you, and that was the trend line we drew in yesterday right there. We broke it, and of course the market's down today. The Dow is down about 50 points so far today. We've come back a little bit, but it's still down 50 points. It's down quite a bit for the week. So let's go to our next market, and this is silver. Silver has, if you read our comments yesterday, we're looking for the 2650 area to find support. That's exactly where it found support today, at 2650, which is right down here. This is today's action. Found support there, bounced back up, but generally speaking, this silver market is really trying to make a base, but it's really having a hard time. It hasn't done it. This level is going to be very key right here, in my opinion. And certainly this area here is going to be very key also. Until we see those markets take it out, I can't get excited about silver. I don't like to try to buy bottoms or what may appear to be a bottom. If it goes down here, then it's a continuation pattern to a lower level. So I would just stay, if you're not already short silver, I would just, for the moment, just stay clear of this market. There's no reason to try to be a hero and try to pick a bottom. It's not worthy of you. So let's go to our next market. Next market we're looking at is the euro. This has been it's an ongoing disaster du jour. How can I say it? Basically, if you look at today's action, we traded as low as today. We traded as low as 1.2166, and we sort of just have come out of that. We've bounced a little bit, but nonetheless, you can see you've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days down. The market, any market's entitled to some sort of bounce, and any bounce you get here is going to be short covering. It's not going to be a longer term play. We're still looking for the 120 level and the 117 level as a target zone on the downside. So let's see how that plays out. So clear the screen and we'll go to our next market, and that's going to be the, well, surprises. It's going to be the NASDAQ, and again, that's under pressure. One thing I like to do is do a couple things, is put our close only charts on. You can see the lowest close we've seen in NASDAQ recently is 2,836.40, and we're currently about 20 points higher than that right now. So tomorrow could be a big day because we have JPMorgan Chase coming in with their earnings, and that's going to be a market mover. And we may see a bounce, who knows? But generally speaking, this market is beginning to look softer. The sentiment's turning. I think the attitude both in Europe, the problems in Europe aren't going to go away anytime soon. And I don't think the regulators or the politicians want to commit political suicide by saying this is what we should do, because nobody wants to hear that right now. So let's go to the next market, and that's gold. Now, why isn't gold acting better? And it really hasn't acted well. You only have to look at this market for the last, well, certainly the last year. And you can see back here, this is back in September 5th of 2011. Almost a year ago, we were trading close to 1900. Everybody thought 2000 is really within the sights, and suddenly here we are. We're 25% lower practically. So I think for the time being, you can see the trend is clearly sort of on the downside. We've taken out the lows here, and I think we need to build some sort of a base here. It's just not clear to me the clear-cut direction. Our trade triangles are all negative, which means we have to lean on the short side of the market. And I think that that's one of the key things I think you have to go with, is just go with the numbers and the trades. And if we go in a little closer, let me put, let's say a 3-month chart on there and the candlestick chart. So you can see basically this 1550 area we talked about is offering good support. It's been down here a couple of times. But if we put a close only, the lowest close lately we've had is 1566 and also let's say 1568. So if we get down here, close below 1560, that'll be a new low close, at least for the just a close only on this, and I think that would not be a good sign for the market. Again, our monthly, weekly, and daily are all negative, and that's the way to go right now. So let's go to our next market. That's copper. Copper is sort of in this dilemma. It's trying to build a base, not unlike some other markets, but it really hasn't done so. There was a friendliness creeping into commodities, but it really hasn't translated yet into any bull markets in the metals for sure. So speaking of commodities, let's look at the CRB index. If you remember, yesterday we were saying that we were not convinced that this market was going to go higher. And of course, today's action, some negative on oil and gold and silver and so forth, gave a sell signal, at least a topping action in this market in terms of a PSR being broken. That's the parabolic stop and reverse, and also our daily trade triangle got short at 287. It just came out at 287, I should say. So it looks like to me that we could see this market pop back down, possibly the 280 level, even the 275 level. But 280 certainly is a better bet right now. Looking at the markets and looking at the commodity markets, corn is really putting on a strong performance today. You saw yesterday's action was a huge swing. You had the swing, the high there was 748 and the low was 685. So that's was a 50, 60, about 65 cents, which is a huge range. And normally when you have wide ranges like this, it normally indicates some sort of a top. I think for the moment, the best thing to do, I would say, is probably, at least I can tell you what we're doing, is if you're an intermediate term trader, you should be out of this market. You should be out waiting to get back in. If it starts going up again, you'll get back in. But for the most part, you should have taken a really, really nice profit out of this market. In fact, just based on our weekly dailies, you would have gotten in somewhere, I would say, somewhere, let's see, the weeklies came into 544. This is the last signal we had on the daily, and that was right here. So I think you've, let me just take that off and I'll tell you what the price was. 522, and you would have gotten out at 707. You would have made a ton of money on that. So let's see how these things play out. But looking at another strong market, and that's actually the wheat market, which is really strong. This is going to be a new high close in wheat if it closes up here, which I'm really quite surprised. It's stronger than corn. So that's a good performance there. Everything's green. Stay long. Absolutely stay long. So let's go to soybeans. Soybeans aren't as great as that. You should basically be out of this market. Intermediate term traders should be out of this market. Long-term traders should be still long, but nonetheless, you can see that worked out really, really well. The last trade we had there was from 1330. You would have got out at 1522. So that's, I mean, it's a ton of money on that trade. So, hey, we've covered a lot of markets. I do want to tell you also about our program that we have, our personal one-on-one Market Club coaching. Is it right for you? Well, I believe it is. I really think it can help you become a better trader, take you to that next level. All you have to do to find out is just give us a call. It's a free call, 877-219-1482, and the consultation is free. We'll have one of our consultants talk to you, explain the program, all the benefits, and how you can benefit personally using one-on-one Market Club coaching from Market Club. Hey, I'm Adam Hewison. I'll be back here tomorrow because it's going to be an exciting day. Remember, it's Friday, and that's when people have to go home with positions, and we'll see which way they're going this weekend. Have a great day trading. I'll see you tomorrow, same time.